Hi, this is Vijay Bamvani here, and I'm still recording this video, firmly placed in my residence due to the corona lockdown. And as you would have made out from the background noises of all the birds chirping and the lovely parrots and peacocks, etc., which happen to inhabit our vicinity. I hope you're staying indoors, staying safe, but still keeping a pulse of the market, your finger on the pulse of the market, as also monitoring what's happening in the public domain. Recently, a leading pink newspapers are those papers which are basically printed on pink thin newsprint, and they invariably carry nothing more than business news, very little else but business news. So recently, a leading pink newspaper carried a news article which caught my attention, and since by now you're familiar with how I think as compared to what I think, I thought I should record this video for you. Now, what the newspaper said was that the fiscal deficit being where it is, the hardships that the people are suffering due to the corona pandemic, and the poor tax collections as a direct fallout thereof. The government is thinking of monetizing the deficit. Not only that, but the opposition parties, which is the United Progressive Alliance, including the Congress Party. There were also statements from the erstwhile Finance Minister, Mr. P. Chidambaram, and a couple of other guys, who seem to agree that monetizing the fiscal deficit, as per this media report, seems to be the way to go forward. Now, what does this very complicated, jargonized technicalese monetizing the fiscal deficit actually mean? If you were to basically go through the article with great detail and then know your classroom economics, you would know that monetizing the deficit would mean one of the two things. Either you commission the printing presses to run overtime and print currency notes. And by currency notes, as you would have seen from my past videos, I'm referring to unbacked currency notes. Unbacked currency notes is when the government does not have the requisite amount of gold, but it goes ahead and prints currency any which way. You are basically either printing unbacked currency notes or, which means in addition to printing currency notes, you might just also simultaneously buy back bonds from the banks. The RBI will buy back bonds from the banks and release money which is invested off the banks into these bonds. Now, why do these banks buy RBI bonds? Because, in India, the banks are supposed to keep a certain amount of capital with the RBI as CRR, cash reserve ratio, and SLR, statutory liquidity ratio. Now, since the banks are to keep money with the RBI, part of it is cash, part of it is bonds, and the more they have bonds lying with the RBI, the less they can lend to the business houses. So the RBI, in its endeavor to release money off the banks, is planning to print currency as well as buy bonds from the banks. What will be the near-term and medium and far-term impact for you and me? Frankly speaking, that's all that I'm bothered about. How does it impact me? How does it impact my viewers and the people whose minds I influence? In the absolute near term, if bond buying is a part of the entire package and not just printing unbacked currency, if bond buying is part of the package, your bond prices will rise, which means bond yields might compress a little bit. Is the recent week's 10-year benchmark bond yield going below the 6% mark a sign of the RBI's bond buying? Maybe. I'm keeping my mind absolutely open. Maybe the RBI has already started mopping up bonds from the markets. But let's keep an open mind out there. So in the near term, bond prices will rise, yields will fall, there will be volatility, and when the RBI ceases buying, bond prices might fall again, which means the yields might just go up a little bit. Now, if you've noticed what happened on Friday, the 29th of May, bond yields which had fallen below the 6% mark actually edged higher to 6.01% mark. That basically tells me that somebody who was buying bonds has now basically backed off a little. The other thing that will happen is that printing unbacked currency will trigger some amount of inflation. That unfortunately is a given. When you essentially have a demand and supply equation where supply of any commodity is now suddenly escalating, in this case currency notes as a commodity, the supply is about to go up, the value of that commodity tends to weaken, which means the purchasing power of the rupee might just contract a little bit, which means your fruits, vegetables, and other essentials, unfortunately, might just get a little more expensive. And invariably, when any kind of stimulus packages where monetization of the deficit is resorted to, the national currency of that country tends to weaken a little bit, which means the USD INR might just go up a little. And as you've already heard from me in the past, I've always expressed concerns that the USD INR rising would unfortunately mean that we will start to import inflation. Any and everything that we import will now become more expensive. So your cell phones, your electronic items, your flat screen TVs, your cars, your sneakers, your imported clothes, etc., all might just wind up costing you a little more. And the biggest negative news of all, fossil fuels, which is natural gas and crude oil, which form 2/3 of our entire import bill, will now suddenly cost us a lot more if the currency was to fall a little bit. The USD INR was to rise and the rupee was to fall against the dollar, which means that there would again be a second round of inflation. So I think you and I need to brace up that our returns on fixed income instruments, which means bonds, fixed deposits, mutual funds, debt funds, insurance policies, etc., your returns are likely to fall. And inflation, on the other hand, is likely to go up a tad. Net, not a happy situation. I'm terribly sorry to be the bearer of this bad news, but hey, I thought as somebody who watches the market, I would rather bring you bad news so you can prepare for it rather than leave you uninformed and not do my part. On this somber note, I'll bid goodbye, but not before reminding you to click like on this video if you're watching it on YouTube. In the comments section, do let me know what you think about this video and what other videos you would want me to record in the future for you. Do not forget to share this video with your family and friends and help me spread the cult of knowledge-based investments and trading. Vijay Bambani signing off for now. Till we meet again in my next video, do take very good care of yourself, your family, and your investments. Thank you for watching.
Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.